In order to understand how bespoke underwriting for contractors actually works, it's important that we first appreciate how standard underwriting works with banks when they're assessing a mortgage application. So if you take the example of a contractor who is working via their own limited company and how a bank would view their income if they were looking at a traditional method of underwriting, you would need to demonstrate 2 to 3 years worth of trading history with your limited company, and the lender would then look at the average of your salary and dividend draw over those 2 to 3 years in order to define income for a mortgage application. Now, the issue with using that kind of underwriting tactic is number one, you need to be trading for a certain period of time with your current limited company. And the second issue is if there are any adverse trends during those 2 to 3 years in your salary and dividend draw, or indeed in the overall profitability of the company, the lender may start to doubt whether long-term affordability will exist for the proposed mortgage. So we looked at this situation when we first started working with contractors in 2004, and we asked lenders to define the earnings of the contractor not via their salary and dividend draw, but to actually appreciate the overall income that the company brings in off the back of the contractor's professional skills and experience. So in reality, we're using the gross contract value to define the income for the mortgage application, and if you're equating that to the trading accounts of a limited company director, it would be something like the turnover on the business as opposed to being the salary and dividend draw. Straight away what this does is it takes into account any retained profits that are kept within the business as part of the income calculation, and indeed any monies that are put to one side to cover expenses and tax bills. So in effect we are having a mortgage application that's assessed on similar lines to a permanent employee, where the gross income is used to actually define the earnings for a mortgage application. Alongside that, what we also have is a much shorter window of time over which the income is actually assessed. So rather than looking at the last 2 to 3 years for a contractor, we can actually get banks to assess the income over the last 3 months. They will usually want the latest 3 months business bank statements to reflect that the invoicing is regular, and in addition to that, the latest 3 months personal bank statements. So that's how the actual income is defined. Obviously, one of the problems with defining income in this way is the contract that we provide as proof of income is likely to have an end date in the very near future. So we also have to convince the lenders that long-term affordability exists for the mortgage. Obviously what we can't do is produce future contracts going forward for the next 20 or 25 years, however long the mortgage term is. So what we do in this instance, and this is where the bespoke underwriting really does come into its own, we actually ask the lenders to look at the CV of the contractor. So they can see the skills, the experience, the career history, and they can appreciate that this contractor, based on what they see in the CV, should be able to attract future contracts of a similar value to ensure that the mortgage is paid over the whole mortgage term.